Welcome to Endless Finance. Let's go over significant market and economic news of past week. At its October 2025 meeting, Federal Reserve cut interest rates by a quarter percentage point to a range of 3.75% to 4%, matching market expectations. This follows a similar cut in September, bringing rates to their lowest since 2022. The Fed cited rising risks to jobs and still high inflation. Powell says a further reduction in the policy rate at the December meeting is not a foregone conclusion. Moving on to gold, the price of gold was stuck in a range during the week, ending the week standing at $4,002. There was moderate safe haven demand due to less supportive factors such as inflation risk, geopolitical risk. Particularly, improved US-China trade tensions are lowering the risk premium that helps gold. There was no strong new driver pushing it decisively higher or lower. Oil ended the week closing at $60.98, which means it drifted lower during this week. OPEC Plus is signaling modest production increases rather than tight cuts that suggests they believe supply is sufficient, which undercuts bullish sentiment. Moving on to stocks. US stock futures edged higher as traders looked ahead to Federal Reserve's rate decision and big tech earnings. Nvidia rose 3.5% in pre-market trading after announcing $500 billion in AI chip orders, plans to build 7 supercomputers, pushing its market value close to $5 trillion. Apple briefly topped $4 trillion, and Microsoft remains above that level. S&P 500, Nasdaq, and Dow Jones hit record highs, fueled by AI optimism and strong earnings. Q3 report surprises. Meta reported a strong Q3 revenue of $51.24 billion, beating expectations, but earnings per share fell to $1.05 due to a one-time tax charge and rising AI-related costs. Despite reporting stronger than expected revenue for Q3, Meta's stock fell more than 9% after the earnings release. The decline was driven by a miss on earnings per share, largely due to the one-time tax and rising capital expenditures tied to its aggressive AI investments. Alphabet, Google's parent company, announced its first ever quarter with over $100 billion in revenue, showing the strength of its online business despite legal and competitive challenges. Microsoft reported strong financial results to start its fiscal year. Revenue reached $77.7 billion, up 18%, and operating income rose 24% to $38 billion. Microsoft's stock dipped 2% in pre-market trading after its Q3 earnings. Despite strong results, this is largely due to investor concerns over soaring AI infrastructure costs the company spent. Berkshire Hathaway's cash stockpile hit yet another high, according to the conglomerate's third quarter earnings release Saturday. Berkshire reported third quarter operating earnings of $13.5 billion, up from $10.1 billion a year ago and $11.2 billion in the prior quarter. The gains were largely attributable to a surge in insurance income. Its cash and equivalent holdings grew to $381.7 billion, hitting a record. The record cash pile could indicate that Buffett is waiting for a good deal. Investors don't see big gains by holding cash and treasury bills. Instead, companies generating low-risk yields while likely waiting for better bargains in the stock market. See you next week with upcoming news.